today I want to look at pound against US dollar. I will also look at the Australian dollar against Canadian dollar and the euro against Japanese yen, and show you how you can very easily make more than 1,000 pips again this time. Hello great people, how are you doing? Today I'm very excited to meet with you people to do another analysis. Last 2 weeks I dropped the first analysis on this series. We looked at USD JPY, and we also looked at the euro against the New Zealand dollar, and I showed you people how you could very easily make up to 1,000 pips, and those trades are doing so well. You know, you can, if you miss that analysis, you can click on the link below, and then you will see the analysis and how well it is still playing out. You know, after 2 weeks the trades are still going very well, because these are swing trades, and most of the time our swing trades are long-term trades that are going to last for weeks. You know, so every morning I come here and I trade live. I show you where I'm entering, which currency pair I'm trading, where I am going to place my stop loss, where I'm going to place my take profit. These are premium signals, but I'm giving you free of charge. So I want you to do me a favor. Click on the subscribe button. Yes, so let me give you 5 seconds for you to do that. So please click on that subscribe button. You know, I want us to work together on this channel. Click on that, and if you like this video, at the end of the day you can give that thumbs up to help the video to for YouTube to promote it to other people. So I really appreciate you if you have done that. Without wasting time, let's look at the screen right now and see what we have here. So on the screen, if you look at it right here, we have the chart of the pound against the US dollar. So let us do this. You know, whenever I'm trading, I don't just go to one time frame. Some persons trade only in one time frame, but I like to look at it from multiple time frames, and I especially like starting my analysis from the weekly time frame. So let's go to the weekly time frame and check this trade. So if you come to the weekly time frame, there is something that is quite obvious to us. Look at it from the weekly time frame. This currency has been in a downtrend. If you look at it from here and mark this point down, you can see that this trade has been in a downtrend from here. Okay, from this point on, you can see it touched. I like there are different ways you can draw your trend line, but I like my trend line to touch multiple points. So you see that it touched here, touched here, touched here, this point, and then here. Because trend line is not actually an exact line. Most of the time the trend line is a zone. So you can now see that this trend line touched 1, 2, 3, 4, 5, and 6. So it clearly showed you that this currency has been world movement. That is number 1 point we need to note. Another thing you need to also note is that for how many weeks, for so many weeks, if I zoom this thing out, let's just zoom the chart out so you can see clearer. If you zoom this chart out, you will notice that for so many weeks, 1, 2, 3, 4, 5, 6, 7, 8, 9, for nearly 9 to 10 weeks, the market has not really given a serious movement either to the upside or to the downside. It has been consolidated. Okay, but that is what the weekly time frame is showing us. So weekly actually favors the downward movement. That is one thing that we should pay attention. Then if you come down to the daily time frame, let's see what the daily information that we can derive from the daily time frame. Okay, the consolidation that we saw on the weekly time frame is actually playing out on the daily. So if you come to the daily, you see that the market has been consolidating within this range from here to around here, to somewhere here. So this market has been consolidating, and there was also another consolidation somewhere here. All right, so if you look at it very well, there are 2 ranges that we need to pay attention. The first range, you look at it from here down to this point, is about 184 pips movement. Okay, then the second range is from here down to this level, which gives us around 291 pips. So this is one thing. So haven't seen this, what information can this help, or in what way can this help us to make money? Because our focus is not just to come here and analyze and feel comfortable that we have analyzed, but we must look for the most effective way for us to make money out of the chart. All right, so if you look at this chart, it's not just for us to come and analyze the chart and feel good. We have to look for the best way to make money out of this chart right now. Okay, so this is what I will do. On the weekly time, on the daily time frame, as you can see, the market was in a range and it broke out last week. It broke out of that range and has come to retest that region. So let's go to the 4-hour time frame. If we come to the 4-hour time frame, the information we have been following up from the weekly time frame right to this point. So if you look at it from the 4-hour time frame, what we saw on the daily time time frame is now clearer. You can see that there was a clear consolidation, and after that there was a breakout, and now the market has come to retest. So with this information right now, I have got enough what exactly I need to place my trade. So what we will just do, if you take Fibonacci retracement from the top of that movement to the bottom, this is what I'm expecting. I'm expecting this market to push back as it is doing right here, to retrace to at least the 61.8 fib level. Why is 61.8% fib level, or it should retrace to the 78.6 fib level. If it goes to any of those two places and show me a reversal candlestick pattern, I am going to take the trade. Okay, so this is what I will be doing on Euro New Zealand, Euro GBP against the US dollar. I will place a sell from here, a pending order for a sell. So I will take my short position from here. That is what I will do. I will take my sell from there, stop loss above that level, and then take profit will be back here. That will be around 2%, 2 times of my risk. Yeah, and then I will take my second take profit 3 times. So this is what I will do. My pending order for a sell is at 1.2722. So we have a pending order on the pound against the US dollar at 1.2722. You can just place your stop loss maybe 3 pips above this high. That is one simple way to do it. But a more advanced and more professional way for you to set your stop loss is to use the ATR calculator. Okay, if you have been trading with me on the channel, you will understand that I prefer setting my risks and reward using the ATR calculator. So if we go, how do you use the ATR calculator? All that has been explained in previous videos. So if you want to know exactly how I use ATR, you can watch the video on ATR calculator here, how to set a correct stop loss and take profit using ATR. Okay, so that is that about the pound against US dollar. So if you look at this right now, take your calculator from here, from our entry point down to our first take profit is about 200 and something pips. So by the time we go to the second take profit, it should give you about 300 pips. So that is the first trade. The second trade here we have is AUD. So the second trade we will be analyzing today is Australian dollar against Canadian dollar. So let's go to the chart and search for AUDCAD. Australian dollar against the Canadian dollar. This currency pair, I think it is one that can give us money within this week that we are entering. So we can pay good attention to this. On the 4-hour time frame, you see that this trade is in a very clear downtrend. Take a trend line, you can see that the trend is just there, downtrend, very clearly a pure downtrend. Okay, but what gives us more confidence is the higher time frame. Let's look at it from the higher time frame. So if you come to the daily time frame, you will see that the market is actually pushing down very well. So this is the daily time frame. Let me make sure that I zoom this place out for you to see. The daily time frame is actually in a downtrend. It's actually in a downtrend, as you can see, the market is actually in a downtrend, went there and is pushing down. So it actually agrees with our downward projection. Okay, so if you come to the 4-hour time frame, you can now see where do you place your entry and your stop loss. Let me remove all drawings. Okay, so on the 4-hour time frame, this is what we will do. So we just take the Fibonacci retracement from this level down here, and I like entering my trade at the 61.8 or 78.6 fib level. So it's already at my first entry point, and because this is a new week, what I would do is to place my pending order as a 78.6 fib level. So I'll just place a pending order for a sell right there. So let's look at this short from here. Okay, we are selling from there, and then we can actually target that our 4-hour weekly target, right? So let me just give me a minute. Our stop loss is right there. Then we move entry the take profit down, take profit target. If I go to the weekly time frame, yes, that movement that we saw on the weekly time frame, that's where we are going to exit this trade. Okay, so come back to the 4-hour time frame. This is what we have here. So this trade actually gives us a risk reward ratio of up to 7. So any amount of money you're going to risk on this trade, you should make at least 3 to 4 times of whatever you're risking. So I think that's a very good trade for every one of us to take. If you have any question concerning what we are doing, drop a comment there, ask a question below. I'm going to reply to your question. Okay, I have so many other currency pairs, but what I will be doing every day by 9:30 a.m. West African time, I come to my channel live to show you the trades I'm taking that particular day. All right, so let's do the final one for today. We are looking at euro against the Japanese yen, JPY. So here we have the chart of the euro against the Japanese yen. Let me remove all the drawings so we can do this together. It's not just for us to come here and take free signals, it's also for you to know. Even without going to the higher time frame, you know clearly what you are seeing here. So the higher time frame agrees with what we are seeing here, but right here, this is what I see. I have seen that we are going to take a buy on this currency pair. So the buy is from here down here. So you will expect a retracement. I'm expecting this currency to push back from here right to this level or to the 78.6 fib level. Those are my 2 trades. If you want to learn how to use the Fibonacci retracement to perform your analysis, I have a video on Fibonacci retracement on my channel. You know, the Fibonacci strategy, I did a complete video free of charge for you. You can watch that video as well. All right, so right here we will be taking a buy on the euro Japanese yen from this level. That is the entry point. We'll keep our stop loss somewhere there, and our first take profit will be here, while the second take profit will be here, and we can still push further. We can still push further to this level right here for the third take profit. So that should give us a risk reward ratio of up to 4. A risk reward ratio of 4. You know, so this is another trade that we will be taking. Now, as we will be finalizing, I want to use this to show you how you can calculate your stop loss, your risk, and your reward using the ATR calculator. So what I have here is called the ATR, average true range calculator. Let me bring it out clearly for you. So if you want to use this calculator to perform your analysis, the principle is that it calculates how far every currency pair has been moving for the past weeks, past days, past months, and it gives you an opportunity for you to use the movement, the percentage that it moves, for you to set the target in a more professional fashion. So if you go to investing.com, what you will just do, if you go to investing.com, you search for that currency pair you are trading. In this case, we are trading EURJPY. Let's see, let's give it 1 minute for this thing to load. EURJPY. Okay, so if you click on the EURJPY chart, what you will just do is go to the historical data and then go down, change the time frame to daily. If you are a very impatient person, you want this trade to close fast and give you that money, you can use the daily time frame. But me, I daily data, but I like using the weekly data to give the trade more room to play out. So when you download this data, you will just take it to your ATR calculator and paste it there. Once you paste it, to calculate the ATR for you for the past how many weeks? 12 for the past 3 months. The highest that this currency pair has moved in a week is around 1.11%. So as you can see, at 1.11%, so you're going to set our entry point is where. Let's look at our entry point. Our entry point is at if we are taking it from the 61.8 level, 159.819, 159.819. You enter. It says we should use our stop loss should be at 158.03. Let's look at it. 158.03. If you come here and I did this thing to 158.03, okay. For people that are going to be very conservative in their trading approach, this is where your stop loss should be. You can keep your stop loss here, and then the take profit target. The take profit is at 165.156. 165.156. If you did this 165.156 and you enter it, that is your take profit target, which is not also bad. Okay, so this is also, so it gives you a risk reward ratio of around 3. But what you need to understand when you're using this method, once the trade moves in your favor and breaks this support level, you will move your stop loss to break even and watch for the trade to hit your take profit target. So with that, we've come to the end. Once again, subscribe to the channel. Enjoy me tomorrow for another sweet edition of trading. Thank you very much and do have a nice day.